first of all, understanding what influences stock market returns. So one of the things that we constantly hear is, I looked at these charts and been able to do a fantastic fantastic returns over the last few years, etc. And then there are a number of places where you could get, like, basically technical recommendations, somebody saying you buy at this particular price, or you go and sell at this price, etc. So does that really help? The answer to that is it could, but it can only help you to a very small extent, because I think one of the fundamental things is the fact that you really don't know what is influencing the stock price at all, right? So research tells us that here are 6 things, 6 buckets literally, that influences stock market returns. Number 1, I think I sent out a poll on the group and nobody selected market cap, right? So market cap is one of the number 1 factors that influence stock market returns. So companies that are smaller tend to have a higher return than larger companies. Number 1. Number 2 is valuation. So Sonia, you mentioned, basically the using the P by E ratio, etc., to kind of value. So stocks that are undervalued tend to have a higher return profile than those that we can say like fairly valued, exactly the same as the market, or those that are overvalued ones. Examples of overvalued stocks. Anybody wants to talk through? Anybody wants to give
Tesla?
Tesla
is overvalued.
Yeah. AI stocks, I would think, at the moment.
Yeah, definitely. All of them are heavily overvalued. Apple, yeah, definitely. Apple is definitely overvalued. Yeah.
Alphabet,
yeah, of course. Alphabet is also overvalued. Yeah, but not as overvalued as a Tesla or Nvidia. But yeah, it is overvalued in comparison to the market. Yeah. So that's the second factor to look at. The third factor is market risk in itself. The risk of staying invested in the equity market, and it is influenced by the macro cycle, the policy, the earnings, the overall market performance, etc. This is what we call market risk research, right? So that influences stock market returns. And then the other factor that we are looking at is the momentum, right? So stocks that performed well recently tend to continue performing well until that particular trend or whatever turns around. So if the stock is going up for a certain period of time, it can very well continue going up until maybe some market conditions change, and basically momentum sort of reverses itself, right? So that's factor number 4. Factor number 5 that basically research tells us is profitability. So the companies that have a higher operational profitability, or you can even say, I think a very, very typical sort of a thing that we look at is at the unit level. If they are profitable, then for every sale that they are doing, they are making profits, and thereby they tend to perform better than the others, sort of typically. So looking at the operational profitability of the company itself is another factor which kind of influences the returns. The last